We had the rand seeing some reprieve on Friday, moving off its early lows, but still on tentative ground. A trade range that you've pegged out for the week ahead?
Morning, Alishia. Yes, the rand did firm slightly on Friday, but we still think that the bias is towards a weaker rand. It's still firmly in a bearish trend. So this week we'd expect it to continue to drift weaker. We're looking for it to reach 733, perhaps even as far as 750, depending on the prevailing risk environment. At the moment, it does seem that things are very risk-off. Safe haven assets are rallying and risky assets remain under pressure. So our base case scenario would be for the rand to continue to drift weaker. But of course, one of the key events this week is the Federal Reserve Chairman Ben Bernanke will be speaking this week at the Jackson Hole in Wyoming conference. And so should there be, at the moment the market expects further announcement of perhaps QE3, further quantitative easing, and that could perhaps provide some slight relief for the rand and other risky assets. But our base case scenario would be for a further weakening this week.
Of course, we are looking at economic data coming through as well in the international arena, but on home ground as well. A PPI and CPI numbers being anticipated. How are you viewing those and factoring in those data points into your equations right now in a context of it being, as I said, a very busy data week on the international front as well?
Yes, it's certainly going to be tricky this week, Alishia, because inflation figures, of course, are always vital as far as the interest rate outlook is concerned. But at the moment, it does seem that with everything happening on the international agenda, both the currency and, in fact, interest rates are probably going to be largely dictated by things that we see happening offshore. So recently, Standard Bank has revised its interest rate forecast. We now see our first interest rate increase taking place in the third quarter of next year as opposed to the first quarter. And that change largely came about as due to a shift in our reading of the international scenario and prospects for global growth rather than what was happening on the inflation front.
When it comes to some of your expectations on that interest rate front, have we seen alterations? Because we've had the forward rate agreements starting to suggest the possibility of a rate cut going forward in the year.
Yes, it does seem at the moment that everyone is starting to reevaluate their interest rate projections. And as I mentioned, I think it's largely due to deterioration that we're seeing in global growth prospects. For instance, the crisis in the Eurozone and in the US have dragged on for far longer than I think our initial expectations were. We've seen second quarter growth numbers come out quite disappointing in a number of key regions. So as concerns over global growth intensify, of course, one has to adjust one's initial expectations. So it does seem that in general there is a trend towards shifting out expectations of when the first interest rate change will take place, and of course should things get significantly worse, one would have to reconsider whether the first move is going to be a rate hike or if it could be a rate cut.
Still, though, our carry trade appeal is still relatively strong. So if a rate cut does come through, one would assume that we shouldn't expect it to put much of a dent to that appeal.
Well, certainly not, particularly if the rate cut is in the magnitude of 50 basis points, which is what the Reserve Bank generally does. However, it must be said that such a move would probably put South Africa a few rungs lower in terms of countries that are popular in terms of carry trade, because a number of other commodity exporting countries and, in fact, other emerging markets are actually starting to tighten rates. So on that basis, of course, investors might find a more attractive yield elsewhere. So I wouldn't say that 50 basis points would be a death knell as far as the South African carry trade is concerned, but it certainly would, I think, reduce South Africa's attractiveness as such a destination.